It's a good set of questions, and I actually have a draft article that I'm working on to kind of analyze viable Bitcoin risks. And so I don't consider any asset to be risk free, which is why I'm not 100% exposed to any one asset. Um, so I'm structurally bullish on Bitcoin, but I do think there are some hurdles it still has to go through on its way to monetization. Number one would be a macro risk. If somehow they're able to, like gold was suppressed for like 2 decades. I mean, it basically had this, when it was depegged from the dollar in the 1970s, gold had this huge run. It went up orders of magnitude in the 70s, and then it had a 20-year bear market where it was rehypothecated, and they were able to have positive real yields on dollars and treasuries. And so, basically gold was pushed aside for 2 decades until, it took a long time of that fiat system playing out and more dilution happening until the 2000s when gold finally had another notable bull run. And so, basically, if macro forces are able to, keep the wheels on the track more than some people think, you can have periods of time where Bitcoin is maybe not growing as quickly as people would expect. No, so that's not my base case, but it's basically you have to be aware of that argument. Um, Number two would be technical risk, right? So at the end of the day, Bitcoin is a network, created by humans, run by humans, and even though it's not proof of stake, it's automated, it's using energy to come to a consensus on the blockchain. It still has some degree of technical risk. The whole marketing of Bitcoin, the thesis of Bitcoin is that you can run your own node and nobody can push updates onto you, right? So unlike Ethereum, there's no difficulty bomb. There's nothing that kind of kills your node over time, at least for 100 years when something like the timestamp gets, runs into challenges, something like that. That might have to be edited. But basically, there's no one who can push updates onto your node. But that's based on the idea that your node continues to function without bugs being exploited. There have been bugs in the past. Specifically, there's the inflation incident, and then there were a number of bugs that were discovered that were not exploited and that were later fixed. Right, that they could have been an issue but were not.
Hmm.
And so, if there was some sort of like library exploited or something like that, where existing nodes were compromised, that puts the whole self sovereignty in a kind of a corner because then you're forced to update, and
Yeah.
people might disagree on what to update to. You could have a chain split, and so I think that even that could be a survivable incident, but that'd be a huge setback to have some sort of major, kind of bug exploit at this point. Now, by keeping the code simple, by having so many smart people review it, by being slow to update nodes to new updates, and being able to reverse to older nodes when something does happen, I think that risk can be mitigated. It kind of has to be treated like nuclear software. They purposely update it very slowly and very cautiously because all you want it to do is work. You don't want to have special
Mm.
features. You just the number one thing is not to break it.
Yeah.
And so I think that there is still there's always a small risk of some sort of cataclysmic bug that is found and exploited throughout the existing node base. Um, so there's that. And then there's, over the very long term, we have to see Bitcoin transition to a fee based system rather than a block subsidy system. And you could have, you know, I would say decentralization is not a spectrum up to a certain point. It's kind of like I would use the analogy of launching something to orbit. Either you get into orbit or you don't. But once you're in orbit, there are different heights of orbit
Mm.
that something can reach that determines, how hard it would be to come back down. And you can also push something so far into orbit that it just leaves Earth entirely, right? So it's both a spectrum, but there's also a critical threshold. So I would say that unlike just about any crypto project, Bitcoin has passed the threshold of being decentralized, but there still are degrees of decentralization that I would like to see improved. So historically, there's been a handful of companies that make all the miners, right? I think that that's being addressed now with the introduction of Intel and Square and Blockstream, right? I think we're seeing more diversification going forward, but there has been supply chain centralization. And for a while we saw the majority of hash rate was in China. Now we're seeing a lot of the hash rate in the United States, and so that's only one part of the decentralization puzzle, along with nodes. But you could have, if you have the majority of miners end up in one jurisdiction, and then the government says you have to restrict certain types of transactions, you have to enforce this soft fork, right? You could have challenges to the censorship resistance of Bitcoin that are not unrecoverable, but they're not great. And that partially relies on having miner revenue be pretty high over the long term, including successfully turning into a fee-based system. And because block size is tight, and you can only do something like 100 or 150 million transactions a year in a world of 7 or 8 billion people, I think if Bitcoin continues to be adopted, I don't think fee revenue will be a problem, right? And there'll be tons of demand for block space. But if you were to have multi-decade stagnation for any reason, you could start to get pretty low, miner revenue, and so the ability to attack it could increase over time, and the ability to centralize it. And so, I think that there still are some centralization pressures that you want to see improved over time, and some of those comes with adoption and just greater supply chain diversification, kind of ongoing usage of the block space. And so and I think the last thing would be, I think Bitcoin's gotten big enough where it's very hard for developed markets to ban it. So, it's really hard to outright just outlaw it if you're not in an authoritarian regime. But one thing you can do is just cut off all the fiat inflows. You can say banks can't send money to crypto exchanges, and so that all all the incoming streams of adoption go from fire hoses to garden hoses, right? It becomes very hard to get more capital into the space, and that slows down growth. And so I think that's still an attack vector where Bitcoin is big enough where it's hard to do that now when you have multiple billionaires own it, when a big percentage of the American people own some Bitcoin. And for a lot of them, it's a single issue voting thing that they'll vote on. It's becoming increasingly harder for countries to cut it off. And we've seen even some countries try to do it and then back up and be like, hey, we're actually this is a bad idea. We're realizing we're just cutting ourselves off from the Bitcoin network. But I still think that the United States and Europe are big enough to be major disruptions should they succeed in doing something like that. The U.S. political environment is polarized enough that I don't really see that happening. Right? If you go back to the gold ban of the 1930s, you had an incredibly kind of centralized. You had you had basically a landslide election. And so you had a lot of political power that could just kind of do what they want to do. Whereas in this more polarized environment, it's harder to do something like that. And so I think Bitcoin is most likely past that threshold, but I think it would be nice to see another cycle of adoption to make sure it's kind of firmly past that threshold. So if I were to summarize those, it's technical risk, it's some degree of supply chain risk and kind of minor centralization, and then it's basically the major fiat on ramps in the United States and Europe are still somewhat of a vulnerability.
Very well explored.
Yeah.
Cannot wait for that article.